George, you don't need to be a smart person to understand stats and all of that to know that South Africa is facing a couple of headwinds when it comes to the economy. And since the beginning of the year, we've seen an accelerated outflow of capital leaving South African shores. So, out of the various headwinds that the economy is facing, what was fanning this flight in capital?
So I think Ilze-Marie, it was a combination of factors. It began last year, not necessarily the outflows, but the factors started last year already. And here I'm referring specifically to the change in regulation that allowed local fund managers to be able to take a higher proportion of their assets under management and invest them abroad. So that's what is commonly referred to as the Reg 28 regulations, as produced by the FSCA alongside National Treasury and the Reserve Bank. So the three of them have agreed that these are capital allowances that they are prepared to work with. And so they've allowed local fund managers to take more funds abroad. Roll forward through to December, and suddenly we had increased incidences of load shedding, which only intensified quite a lot more in January of this year, when it became quite obvious that this was not going to be a problem that was temporary. It was going to be around for quite a while. It was going to be very disruptive to the economy and have quite a large impact on the way businesses function and overall confidence and sentiment in the economy. So that happened in January, and it wasn't long after that we got grey listed by the Financial Action Task Force. And as per the IMF study that's been done on countries that have been grey listed, countries that have been grey listed can expect up to a 7% of GDP's worth of outflows to follow. Now, I don't think that South Africa has suffered such a big degree of outflows. And that may have something to do with the sophistication of the markets. It may also have to do with the attraction of domestic assets and the fact that we're on a good time zone, etc. But we did suffer outflows. There's no question about it. And that was particularly acute between let's say, February and May. May was the month in which we saw a big blow off in the rand, and in fact, it coincided very neatly with the outflows that we saw from the bond market. We saw outflows from the equity market as well, but predominantly it was from the bond market. And the bond market, in terms of liquidity and in terms of size of value traded, is many times bigger than the equity market. So really, this was a bond market story. And it all culminated. It was almost an aligning of stars, if you like. A whole bunch of events happened that were not particularly positive for the country, and it manifested in very strong portfolio outflows that took the rand substantially weaker. And I think there is, and I think there were some very smart money investors that took advantage as of the beginning of June, because June turned out to be a stellar month for bonds. They recovered almost all of what they lost in May, and have positioned themselves quite nicely for the possibility that even more gains are possible going forward, especially if investors start to look through the interest rate cycle, start to focus on an environment of lower inflation that would warrant easier monetary policy. Should investors indeed start looking through the cycle as we're anticipating that they will, I think bonds stand a very good chance of having a very good second half of this year. In which case it tends to support the rand. So I think there's a strong argument that could be made for rand to extend its recent recovery through the second half of this year.